in this video, we're going to reveal incredibly important information that you must know if you're a day trader or a swing trader. Make sure to watch the video until the very end, where we're going to show you what do these two multi-million dollar options bets in one particular sector have in common, and why is it actually important for you to know this information today. Now, before we go into details, it's not about the coronavirus that everybody is talking about today. Now, it's about how institutional investors who actually move the markets react to all the news flow that you see. So we've shared this with our paying members yesterday and got them positions ahead of the drop this morning for the right reasons, and it wasn't the coronavirus. Look, guys, this information is so important. We're going to take a few minutes to record this for everybody so you wouldn't miss out. Now, here's what we're noticing. Before I go into detail, answer this question. Looking at these action right here on these 6 charts, what do you see and why do you think that is important? I'll give you a few seconds to answer that real quick. So this is a chart of UNH, this is a chart of MOH, this is a chart of Humana. All of these are healthcare stocks. This is clearly the chart of Apple, Facebook, and Microsoft. What do you see? Well, what you should be seeing here in this chart, guys, is all the healthcare stocks are moving higher. All the big tech stocks are dropping. Now, this is a snapshot from February 11th, and this right here has actually continued on February 12th, and it's likely to continue going into today on February 13th, and going into tomorrow on February 14th, and next week. Now, you may be thinking, what is the big deal? Okay, so, some technology stocks are dropping a little bit while healthcare stocks are going on. Well, it's incredibly important because institutions just began to sell tech and rotate into healthcare. And this is a big market crash indicator. Last time this rotation took place, guys, was in October and November of 2018, right before the market crash in December 2018. So let me show you what happened exactly. So while the market was doing this, the healthcare stocks were actually moving higher. As you can see, this is October, November 2018. This is where our market moves, 13 market moves formula was screaming, hey, it's time to short the market. This is where the formula screamed again, hey, even a bigger drop is coming. But while all of this stuff was taking place, this one sector, the healthcare sector, have been the best sector. It has actually continued higher all the way until this last leg of the entire market lower. So basically what I'm trying to say, this rotation from the technology sector into healthcare sector right now, predicting this, possibly followed by this, and ultimately a drop lower. Now, at this point, we're following 2 historic analogs. One of them was presented to you over the course of the last couple of weeks, which coincides with the February analog from 2018. And this analog right here, guys, as you can clearly see, it's October, November, December of 2018. So understanding risk rotation is key because this rotation, guys, has just begun. And this rotation is pointing to technology stocks actually doing this right here. So October, November, December 2018, again, this was when Amazon was hitting all-time highs. Coincidentally, Amazon hitting all-time highs again right now. This is when healthcare stocks began to rocket higher as the technology stocks began to sell off. And we believe this is exactly the pivotal point that is taking place right now in the markets. So with that said, however, we want you to understand that we are waiting, as pointed in the last couple of videos, we're waiting for a solid break under 33.63. Now, we've had a couple of undershoots where we actually went above that 33.63 level in the last couple of days, but we bounced out of it. Now, so far, we're going into completion of the creation of this head and shoulder pattern. Now, I'm going to show you where this short-term head and shoulder patterns could actually propel certain stocks to go to, and this could actually do this to the entire index as well. Now, understanding that what we're looking for is a close on the 33.50. Okay, it would actually, so a close below 33.50 today on February 13th would indicate a huge shift confirmation in the market behavior that will be followed by multiple days lower. Okay, so far, things do not look as bad. But again, things did not look as bad right here because at that point, all the charts had maintained a perfect uptrend. Everything was wonderful. Everything was beautiful until a 13 markets move formula predicted this sudden drop. So 13 market moves formula lately has been pointing to a lot of move 11s. So this stop right here could be the very top from where the markets will go lower. But before you put some big put positions, here's the level. Again, 33.50. A close below that, okay, would indicate multiple days lower from here. So this is how pretty much all the healthcare stocks look right now. And notice this rotation has just begun. It literally just begun within the last 72 hours. So MOH, Molina Health, okay, all healthcare stocks pretty much look like this. I mean, you can pull all of them up. Humana, UNH, all of them's been rocketing higher. Now, sign of the recession. This is the second sector that we're observing is auto sales. As you know, the myth that's been going around for the last year or two is that United States consumer is strong. And so we can easily measure or use one of the measurements for how healthy U.S. consumer really is by monitoring car sales. Well, here's a chart of a company that sells a ton of cars here in the United States, and ticker LAD. As you can see, while all the institutional investors are telling you how strong the U.S. consumer is, what have they been doing? Well, they have been actually selling the hell out of the stock. So far, it's down from 165 all the way down to 131. Actually, yesterday it dropped to all the way to 127. This was one of the alerts we've pointed out when the stock was trading around here yesterday. So this was about a 200% just yesterday alone, guys. But more importantly is to understand not just the short-term move, but what these overall move indicate where the market could be going next. So you've got another head and shoulder formation right here. You've got a multi-top formation right here. More important than anything is you see this blue line on the way lower, fixing to, in not so distant future, intersect the orange line, creating a death cross, pointed to a much more severe move lower. Now, this particular car company is already dropping about 30 bucks off the top. Now, these companies are right for the drop. CarMax, okay? Last time, not so long ago, about a month ago, we've predicted these drop from 100 level all the way down to 90, and it's about to do it again. So multi-top formation in CarMax, guys, showing a topping. So they've taken some profits on this, pulled the stock back up, notice on much lower volume. So this stock is pointing that auto sales, okay, are peaking, and we're likely to go substantially lower from here. AutoNation, another huge auto sales company here in the States, okay, two bearish candles back to back. Look at the formation of the death cross. We're in the death hook formation right here. This blue line is awfully close to this orange line. We're about to cross. That designates this move higher, this bounce. Okay, we've been talking a lot about shorting the bounces, guys. This bounce higher is about to resolve in a drop lower, and with that could be a much sharp drop lower. Now, a couple of videos ago, we pointed to Tesla head and shoulders. Remember, I was just showing you the head and shoulders on the S&P 500. Well, multiple alerts have been sent out to our paying members. Here's the thing, this Tesla head and shoulders, we basically suggest anytime Tesla bounces to 800 level, 820, short it. In the last couple of videos, which have not been posted public, we've suggested actually shorting Tesla anytime it gets to 780, 785. Now, here's actually specifically what we said yesterday. We've been building this huge Tesla short position in the last few days. Yesterday, February 12th, here's what was sent to our paying members. Tesla breaking 235, add more, 770, 750 puts. Now, if you take all the high basically from Tesla, guys, it's nothing but just another auto sales company, despite what the media wants you to believe. So here's the deal. The alert was sent here. The alert was sent here. It was sent here and here yesterday before the stock does what? So where are all the bulls now? All of a sudden, we don't see them comments anymore, right? So bulls, good luck. Okay, go ahead, buy some calls. Okay, guys. It's simple. The charts, if you stick with your strategy, if you follow them, okay, they will produce results. Now, third sign of a recession, guys, is transports, okay? FedEx, guys, it's not a coincidence. A couple of videos back, I've showed you a chart of RCL, cruise line, that had a substantial drop after forming a triple black candle on the daily chart. This is what FedEx is about to do in not so distant future. It's about to reverse this action. It's right against. Notice what FedEx does every time it gets to this orange line. Okay, it always shoots it slightly, it drops. overshoots it slightly, drops, overshoots, drops. This time, for example, this one instance, it didn't even overshoot, it just touched it in a drop. So we're about to due for another drop like this. Every time we've had this touch or overshoot of the orange line, it created another move lower. And in this particular instance, like all the way from 170 to the 140. So we're not talking about a small move, but let's say we get a smaller size move. We can see FedEx all the way at the 145 level. Basically, over the next 2 to 4 weeks, it could be very realistic. A UPS chart actually looks even worse. Do you see all the similarities, right? So when the transports point to the next move lower, guys, it's not a good sign for the market. And if you are curious about all the signs why the market could go substantially lower, guys, there's multiple videos on this channel. There's one that outlines a lot of reasons. It's called 13 Bear Signs of a Market Move Lower. 13 Bear Signs of a Market Crash. Find it on this channel. It was placed in the last couple of weeks. Check it out if you want to know more information about why the market is positioned to actually drop substantially lower from here as we're hitting all-time highs. Now, this bearish reversal candles back-to-back actually indicate a move lower in UPS as well. Now, here's the biggest part that I believe nobody's noticing that should be talked about to anybody that's trading right now, so we can position properly. Divergence between market pricing and reality, guys. I mean, this is getting out of control, guys. And last time we had circumstances like this, clearly best examples are the crashes, the tech crash in 2000, the real estate crash in 2008. So stocks hitting record highs. That's Bloomberg headline, guys. I mean, this is Bloomberg headlines. Stock hitting record highs. Read this. While Powell suggests the Fed lacks the ammo to combat the next recession. Okay, so basically, while Powell is saying publicly that Fed is helpless while the market is hitting all-time highs, the market is refusing to drop lower. Now, this is a huge divergence, and it could last for just a bit longer, but it's not going to last much longer, guys. We're very, very close to a pivotal point. There's so many things that point to this reversal in the market. It's getting to the point of beyond ridiculous. And when things get beyond the ridiculous, you can bet that some sharp drops in the market, just like I pointed out earlier in the video, like in the December of 2018, they have the highest probability of actually happening. So Fed chair says, hey, we can't help the market any longer, okay? The market has no reaction so far. What I've pointed out in some videos over the last few years is that market has something that we call a delay effect, okay? But once everybody's catching on, that's why the sharp drops in the market could come and happen rather rapidly and quickly. Okay, so market is trading higher than the point when the coronavirus broke out. Okay, so we had a temporary drop due to the coronavirus. That's understandable. We've broken down the charts on that a few videos back, a couple of weeks ago, before anybody else actually talked about it. And so now the biggest divergence is that nobody is pricing any kind of real impact from the coronavirus, or at least that's what they want you to believe in the news, and that's what everybody's saying. At the end of this video, I'm going to show you in just a few minutes specifically why that is not the case. We can see institutions are placing multi-million-dollar bets on certain areas and certain sectors, actually telling us that the impact of the coronavirus is going to be much more prolonged, okay? And I'm going to show you exactly how they trade it. Now, this divergence right here, guys, this is beyond ridiculous, right? Because the market, when the coronavirus broke out, was trading about 100 points lower than where it is right now, on S&P, that is. And the fact that it's now trading higher than when the coronavirus broke out, okay, it really communicates how crazy things are getting out here. So market is refusing to price anything negative. So they're refusing to price the consequences that are not calculatable yet from the coronavirus. And that's one thing, okay? We can overlook that. But really mispricing and overlooking what the Fed chairman has to say, that central bank may not have the firepower to help out the economy, okay? And Powell is going to basically Senate and Congress, asking them to lower taxes as a way to save the economy. And all of this is happening, okay, while Powell is begging for tax cuts. Here's another market put that nobody's talking about that we've called the Sanders put. Okay, so here it is, Bernie. I'll text the hell out of you, Wall Street, and only a few people notice. As you can see, Goldman Sachs CEO says, okay, Bernie will ruin the U.S. economy. Now, guys, it's funny now, but it may not be funny if you don't take action, if you keep buying calls here on the markets, because there's just too many things that point to a market reversal here. So let's talk specifics, okay? Shopify at all-time highs yesterday after a great report. So we actually send out the 13 Mark Moves daily video to our subscribers saying, buy calls first and then reverse them into puts in the expectation of this black reversal candle. So congratulations, guys, to those of you that took the trade. That was an awesome trade. Actually, puts made more money yesterday when Shopify was going higher than the calls, okay? And if you don't understand what the hell I'm talking about, okay, you guys definitely need to click the link below and get more information so you can understand how puts on Shopify yesterday made 3-4 times more money than the calls. So with that said, okay, let's take a look and see how ridiculous things have gotten. This is Shopify. I've been showing you some charts from December 2018. Shopify was at $119. So between 12 months, 13 months, in 13 months, Shopify basically increased 5x, 5 times the money. So it would be ridiculous to think that people would not be taking some kind of profits here, and that's exactly what's going on, okay? The divergence is right here on the RSI, guys. If you take an hour charge divergence course, it's right here. This is the divergence, okay? This is pointing to institutional investors actually taking money out of the stock, and that's likely to continue. Now, this would be one thing if it was just one stock, right? But let's take a look at Amazon. Yeah, okay, Amazon's been bullish, and we've been playing it on the call side, but we've sent the alert telling our subscribers to actually sell all the Amazon calls at this point because of these bearish reversal candles, because of this diversity that's developing. Amazon rockets to the moon to all-time highs. Well, what? The volume drops off. Okay, you got clearly, as the stock moves higher, do you see the participation here in the accumulation distribution? Nobody wants to buy the damn thing. If you're looking at the price action tells you that it's going to keep moving higher. Okay, but everything else is actually pointing to a reversal. Since Shopify and Amazon are in the same sector, okay, we're noticing that two charts communicating to us the same thing. Watch BABA earnings report today, guys, on Thursday, the 13th of February, guys. BABA is likely to sell off. So that would add a third stock that is likely to sell off on good news. When you combine all these data together, guys, it's telling you there is a shift, there is a reversal in the market here. Now, just to refresh your memory, and some of you may not know, may not remember, Amazon a year ago was trading at $1,343. So the stock pretty much doubles. Not quite, but substantial growth here, right? So $1,343. Right now it's at $2,170. So you've got some substantial room to the downside. And those of you that looking at the chart think like, oh man, this can't happen. This is not going to happen, guys. The same people that didn't believe us that Amazon can drop there, right here, when we suggested short it here, okay, they started believing when it did this. Okay, now this is absolutely the worst time to start believing that things can drop. You want to believe that things can drop right when they're trading at the top levels if you want to make money as a short seller for utilizing put options. Now, another story is BKNG. Currently, it's making a bounce, guys. These candles right here against this level, okay, everybody is bullish in the last couple of days. That is likely to reverse, especially with the Expedia announcing earnings after hours. So, to understand the history of BKNG, December 2018, BKNG at $1,616. Now, in the prior videos, I've shared some historical analogs with you where I've shown you how BKNG in February of 2018, within a week or two, drops $280. So the level where BKNG is trading at right now is nowhere near in relation to where the stock could fall historically if we even remotely follow both of these historic analogs or just one of these historic analogs. As you can see, if we compare the charts and the levels, they look very, very similar. And the candle formations look very, very similar as well. So I'm showing you this so you can understand the next thing. What I promised you I was going to reveal to you guys by the end of this video. So there's two multi-billion-dollar bets on the travel sector, and they have one thing in common, guys. This bet right here on BKNG was placed yesterday. Now, you're going to be shocked when I show you this. This bet was placed buying $1.5 million worth of BKNG puts that are actually expiring next January. So yes, this covers a time frame of 11 months. So somebody thinks that this potential drop in BKNG that could be coming up could drop the stock very close to the levels, actually lower than the levels that where BKNG was trading in December of 2018. Now, clearly, the only other type of circumstance in the history that produced dramatic drops in travel stocks when the economy was completely dropping like crazy, and the first case would come to mind, should come to mind to anybody that's been following markets at least for a little bit. It's the 2008, right? That's when nobody wanted to travel, nobody was looking to do any business, so travel sector was shot. Travel stocks were dropping. So this bet right here tells us that whoever is placing this $1.5 million bet, okay, thinks that the coronavirus impact has not been calculated yet, that the travel stocks, impact on travel stocks have not been calculated that, and clearly if they thought it was just a short-term outcome where travel stocks could drop, they would be buying a shorter-term expiration. They wouldn't be spending $1.5 million in the expectation of, and especially hitting this 1300 level strike, which is $600 lower than where it's at now. So what I'm trying to say, if this institution that bought these puts, if they were really thinking that the drop was just going to be short-lived, they would buy a higher strike and a shorter term expiration. What this trade communicates to us is the fact that they're calculating this move lower in travel sector to be not only sustained, but much, much deeper. Now, the second bet was placed at 2:08 p.m. yesterday on February 12th, and that's a $2.3 million bet in Expedia. Now, these have June 19th expiration, so about 4 or 5 months from now. Okay, somebody bought 5,000 puts at 4.7, so 2.3, a little over 2.3 million, betting that Expedia will drop. Now, again, they're calculating a lengthier time drop than they could have done. Now, the strike here is real close to where Expedia was trading yesterday. As a matter of fact, at the time this trade was, the trigger was pulled on this trade, it was trading at 110.72. On BKNG, they pulled the trigger at 1952. We're actually suggesting our subscribers, our paying members, to pull the trigger on this when the stock was trading at 1963. So we actually had a better entry on BKNG. You can go back to the alert that I've showed you in one of the slides. And so BKNG can actually pop slightly higher. In that case, we suggested to buy more puts. So use this to your advantage, guys, because these trades right here, they have one thing in common. If you think something is going to drop in the next 11 months, and if you think something is going to drop in the next 4 or 5 months, okay, when do you actually make a decision to go in and put this trade on? Well, you want to put this trade on right before you think something is going to go down. Okay, so the one thing that these two trades have in common, guys, is the fact that they were both placed yesterday on February 12th when the market was trading at all-time highs. Understanding this is another sign that the market is at its top, because you don't go and put $2.3 million in options, okay, on something dropping. You don't go and buy $1.5 million in options just because. Both of these trades were placed yesterday within 3 hours away from each other. So use this information to your advantage, guys. If you are new to this channel, make sure you subscribe, click notification bell so you don't miss on any videos. If you'd like to improve as a trader and take your trading skills to the next level, guys, it's very simple. You can actually schedule a call on our website. So just go right here, tradingoptionslive.com, click the schedule a call, okay? And you will get to talk to a live representative. Ask any questions you want about trading, courses, alerts, whatever you want, the markets. Guys, we're here to help you out, so take action. Do it now because this huge drop is coming and I want you to take advantage of it. Instead of the drop, taking advantage of you. Let's roll. Make it happen. Have a great trading day. I'll catch you guys in the next trade tomorrow.